House Speaker Paul Ryan says middle-class families will see a tax cut of nearly $1,200 under the new Republican plan. The House bill reduces the number of tax brackets from 7 to 4. The proposal increases standard deductions and expands the child tax credit. But it largely eliminates popular state and local tax deductions and limits mortgage interest deductions. The House Ways and Means Committee will take up the bill this Monday. CBS News business analyst Jill Schlesinger is here to break it all down, what this tax overhaul means for your family. Good morning to you, Jill.
Good morning.
So let's start with the brackets. Going from 7 to 4 already sounds simpler and better. Is there a but to that?
Well, there is a bit of a but. It's 12, 25, 35, and 39%. And remember, everybody, I know you look at those numbers, but we have a progressive tax system. So if you see this, look at this for individuals. You make up to $45,000, you pay 12%. The next 45 to 200,000 jumps to 25%, and so on. So what's good about this is it is a simplification. But what you'll also notice that 39.6% rate, that's still in there, that wasn't going to be in there, it's applied to much higher income. So yes, indeed, the middle class is likely to be helped by this, but if you make a lot of money, you're going to get helped by a lot more.
What about doubling the standard deduction?
Well, what's interesting about this doing that is that if you make less than $24,000, you're not going to pay tax. So that seems really great. And when you claim the standard deduction, tax filing is far easier. Right now, about 70% of filers claim the standard deduction. Under this new plan, it looks like it's going to jump to 84%. So that's good. It's easier. But there's a caveat here. In doubling the standard deduction, the plan will also get rid of personal exemptions. That's what you claim, $4,000 for yourself, for your spouse, and for your kids. If you're a middle-class family and you've got a bunch of kids, this plan may not be so good for you. So it's a very strange plan because it's quite particular to each person's situation.
So you're saying essentially because this plan would also increase the child tax credit. If I'm married and I have kids, which I don't, but if I were, what would this mean for me?
Go get some kids. It goes from $1,000 to $1,600, Vlad. Well, let's talk about that. This is going to be a family tax credit. So from $1,000 per child goes to $1,600. That's very helpful. Also, it expands the income range by which you can qualify for that. You'll also get a $300 deduction if you are taking care of maybe an elderly relative. Again, this really is focused on your family and, by the way, where you live. It's extraordinarily important.
Yeah, I think it's fair to say some of the most controversial stuff will be the repealing of the state and local tax deductions and limiting of the home interest mortgage deduction, right?
Oh, right. So here's what goes on right now. If you itemize your taxes currently, you can deduct your state and local taxes against your federal return. Under the new plan, you can no longer do that, but you can actually deduct property taxes. That's capped at $10,000. So what's happening right now is the National Association of Home Builders, the National Association of Realtors is against this plan because they believe those deductions help the housing market. And again, the mortgage interest deduction, very important. If you have a mortgage, relax. You're grandfathered in. New mortgages, interest is only deductible up to a $500,000 mortgage. This is very important. It looks like it's also going to apply to refis. Complicated plan. Very much depends on where you live.
Gotta go, but bottom line, who benefits most?
The ultra wealthy, and I mean the ultra wealthy.
All right, Jill, thank you very much.